Good morning. Welcome to Stock Market Today. It is Thursday, March 26th rather, 2020, and I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo _ CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email to follow along with this show, as well as get daily stock ideas. Hit your inbox every trading day before the market opens. So let's dive into it now. U.S. equities were higher in Wednesdays, trading up for a second day in a row. But they did finish well off the best levels of the day. Industrials, energy, and financials outperformed. Consumer staples, tech, and comm services finished lower. Treasuries were mixed across the curve. Dollar was weaker versus the euro and sterling, flat against the yen. Gold was down 1.7% after back-to-back gains. WTI crude was up 2%. As we get to the desk this morning, futures are down about 1% after posting back-to-back gains for the first time in over a month. Asian markets were mixed overnight, with Japan, China, and South Korea all finishing lower. European markets are weaker as well. Treasuries are stronger, with the curve flattening. The dollar is weaker on the major crosses. In particular, the yen. Gold is down 20 basis points, and WTI crude is off 3% to get us going on a Thursday morning. And as we had two in a row, as stimulus hopes drive the beat down rebound. That's what I'm calling it. This is what I'm going with. It's a beat down rebound. We've been beaten down, and now we're rebounding. How much legs this rebound has remains to be seen. We'll start to look at some key levels. But if we look at the stocks that outperformed yesterday, if we look at the sectors that are outperforming over the past few days, it's the beat down rebound. 2350 as initial support still holds. Below that, 2000 to 2100. Resistance starts to begin in the 2700 area. From a meaningful standpoint, we will look at some retracement levels a little later on in the show. RSI is holding bearish ranges, but there is a small bullish divergence that we started to point out yesterday, and we'll continue to point it out. Would love to see some follow through to the upside. I think there's going to be a lot of work to do. Even if we did rebound, there's a ton of work to do right here in this 2800 to 2900 area. Moving averages have yet to even cross. So something to keep in mind. Let's keep an eye on that. Chaikin money flow is neutral to slightly bullish as we get going here this morning. Let's talk about our market in a minute now. Two-day winning streak on the back of stimulus hopes. Yep. It started with a handshake deal in the middle of the night, some fiscal stimulus making its way through the Beltway and through Congress in D.C. To provide some relief for the economy here. Breadth metrics are washed out, but some are beginning to shift, and that's kind of interesting to me. We'll take a look. We're highlighting upside retracement levels today. Healthcare equipment has potential if a base builds. We're not going to touch on that in that show today. If you want to read my thoughts on healthcare equipment, sign up for the 14-day trial that we offer at the end of the show. You can start to get my notes and catch my views on some of the different industry groups. Futures point to a lower open today. Major indices from a power bar perspective, still a disaster. I'm not going to sugarcoat anything, folks. It's a disaster. Look at how strongly bearish these are. We'll look for signs of improvement, obviously. We're not going to remain dogmatic. But Dow adds 2.5%, no bulls. S&P 500 adds 1.4% on the day. Starting to see a little bit of a reprieve here in the power bars. We're up to 2 bulls. 2. But that's up from 1, so I guess in theory it did double. NASDAQ, 3 bullish stocks. Small cap 63 to 503. NASDAQ was an underperformer yesterday, and that did catch me by surprise. Bonds downtick, sending yields higher. Industrials are the leading sector, up 5% on the day. Beat down rebound, 0 bulls, 25 bears there. According to the Chaikin Power Bar, small cap stocks and large cap stocks are strongly bearish, as are the major indices. Consider stock of the day now. This one's auto-generated. Sorry, folks. I did not put a stock of the day in my note today, so I didn't have one to substitute here. So auto-generated Opco Health, very bullish. Biotech, due to attractive financial metrics, very strong price volume activity, as well as positive expert activity. Very bullish stock above trend line. This is a dollar stock. It's good for illustrative purposes, not necessarily an actionable idea right now. Not for anything. I have no cares here. on beaten down $1 stocks that are middling relative strength, bad money flow. It is deeply oversold. Fine. Probably better opportunities out there, in my opinion. But this was auto-generated, so I'll run through the process and analyze it for you. It's just not my cup of tea. I tend to stay away from these lower price stocks, and maybe that's a mistake. Maybe I should broaden my horizons. But for now, with everything that's going on in the market, I have enough on my plate, so I'm going to just breeze on through. Taking a look now at the sector tracker, the movement of the major sectors over the last 5 days, you can see, it's a beat down rebound, right? Energy at the top of the list. Are you kidding me? Discretionary, industrials, materials. These are all the hardest hit sectors over the past month, even more than that. And they're seeing a rebound here. Maybe, some folks taking off their shorts, some folks taking off their hedges, maybe some folks just looking for an opportunity. I'm not convinced yet. My view. I am keeping an open mind, right? I do think Monday marked the initial low. That's my base. I do think Monday was the initial low in the sell-off, right? Wouldn't be surprised to see a rebound. We'll look at some retracement levels to see where we could carry, but I'm not convinced that we're out of the woods just yet, based on my work. All right, at the bottom of the list, right, the things that had been holding up, right, staples, use, healthcare, REITs, right. Nice to see tech still doing well. Biggest weight, we like tech, if for nothing else other than a relative basis. But there might get to a time where that doesn't make sense, and we'll change our mind. When that information presents itself, we'll present it to you. Let's look at our industry in focus now. Transport services, right? Obviously, a bit of a disaster of late. Over the past 6 months, underperformed over the past 6 months by 11.04%, with a really weak power bar. 7 bearish or very bearish stocks for only 1 bullish or very bullish stocks. That earns it a rank of number 4. Think about that, right? How many of these have you seen over the past week with 0 in this slot? So just having 1 gets you a rank of number 4 of 21 subsectors, right? Names we want to look at for potential bearish opportunities if you do trade that way: Kirby, Allegiant, JB Hunt, all with very bearish shake and para gauge ratings. And take a look at the fund here. My inclination is to use strength to lighten up rather than look for opportunities on weakness, right? I know there are a lot of people out there who are itching to catch that falling knife, right? And then the market rebounds 10%. You feel like you missed it. I don't think you missed it. You're trading counter trend now. Trading counter trend is hard. There are people who do it well. It is a skill set that requires a lot of patience and the ability to act quickly. We like to trade with the trend. Trend is down. See the trend line here? Down. We're below it. Down. Underperforming the market. Down. Bearish money flow. Down. Overbought. You get the drill. All right. 1 bullish stock, 7 bearish stock. Weak trend. Down. Okay. The trend is down. We may rebound. We may rebound quickly. We may get a December 18 type event. I don't see it yet. I'm fine with missing the early stages of it. I'd rather have confirmation. We're going through an economic shock, the likes of which the world has not seen, not in its present form anyway. Taking a look at what's trending now. Yesterday's S&P 500 movers and shakers are gainers and losers. Aflac, top of the list, up 26%. After the CEO said he's going to step into the breach and buy some stock. Not CEO, I apologize. COO, stepping into the breach to buy some stock. Boeing said that they are going to restart production of the 737 MAX. That sent that stock higher at 24%. You have Boeing swinging around like an internet stock. That just tells you the market we're in. Norwegian Cruise Line, Royal Caribbean, right? Coronavirus volatility plays. Beat down, rebound plays. Maybe they come back, maybe they don't. Me personally, I don't see the cruise industry as, top of the list for a bailout. That's just my opinion, right? Airlines, sure. Hotels, sure. The restaurants, sure. Cruise lines, not for me, but that's a personal view. MPC caught a downgrade from Raymond James. Stock moved up 20%. So that's always kind of tough if you're the analyst who made that downgrade. But that just goes to show you kind of wild market we're in right now. On the loser side of the board, Target said that they were going to withdraw their guidance. Think about that. Target, massive company, who's actually benefiting right in the near term, right, from the shopping that's going on. They're withdrawing their guidance because they have no visibility into their business with everything that's going on. CTL caught a downgrade at Citigroup, down 9%. WBA One of the stocks that had been holding up well, maybe a source of funds here in the near term, down 8.42%. ADS down 8.33%, no real news. And, WBA and Kroger, I guess you can say that they are down in sympathy with Target because nothing company specific, but with Target withdrawing their guidance, maybe people are starting to make those read-throughs. That's pure speculation on my part, but generally how people tend to look at the world. So let's talk about breadth. Begin to stabilize is kind of what I can say here. We're no longer precipitously declining the way we had been, right? If we look at the percentage of stocks above their 200-day moving average, right? And we're at only 4% of the stocks in the S&P 500 are above their 200-day moving average. But we're starting to see some signs of a stabilization, no longer completely falling out of bed. That is what kind of informs my view, a little part of what informs my view, that I think Monday marked the initial low. Right, so what are we looking for here? Two things. Should the market begin to fade and roll over again, we'd look for higher lows on these metrics. However, what if it's December? What if it's December of 18? Well, if we just get a run through 30, that would start to pique our interest, right? We have to be mindful, right? A lot of moving parts. There's no one bullet that lets us know, okay? If we look at the percentage of stocks above their 50-day moving average, we are at 1%, right? But we're just kind of flatlining there. Obviously, we can't go below zero. So we do have ultimate support at the zero level. So just something to keep in mind. But for me, it's just nice to see that these things are not precipitously falling out of bed. I think, as you know, our base case is rebound, retest. But we have to be open to the idea that that doesn't happen, okay? And what does that mean? That means, if the markets runs away, that means we're going to be chasing, and that's fine too, right? We want conviction that a trend is in place, right? We're still in a downtrend. So it's hard for me to get excited just yet, right? Additionally, number of new lows on the New York Stock Exchange. Number of new lows on the New York Stock Exchange continues to come in. All right, so that's an encouraging sign as well, right? After peaking above what we saw back in December 2018, this metric is starting to come in. All right, so another encouraging sign that leads me to believe that Monday marked the initial low, right? Everybody's been bobbing and weaving and looking for that initial low in the sell-off. I think we found it on Monday. I really do. I don't think we're out of the woods. I think we're in, 30% declines, right? Historically, we're likely to be retesting, but I think we found the initial low. Fair enough. How you choose to trade from there, recognize that if you're chasing rallies, you're trading counter trend, in my opinion, and that's a hard game to play, right? Think about it in terms of swimming. If anybody out there is a swimmer, especially if you've ever been swimming in the ocean or anything that's tidal, right? Is it easier to swim with the tide or against it, right? The answer is obvious, right? Or anybody out there who's a sailor, right? Kind of always easier, right? Sailing downwind, right? Actually, sailing with the wind is easier than sailing against the wind, right? When you're sailing against the wind, it's a lot of bobbing and weaving, tacking, right? Tacking, back and forth. It's a grind, right? The upside here is going to be a grind. It's against the trend. That's my view here in the markets currently. Finally, I said we'd look at retracement levels, where we could go. I mean, it just goes to show you how steep this decline was. We could rally. A 61.8% retracement get you back to about 29.30, and you'd still be below the moving averages. Think about that for a moment. Other key levels, think 27.90, think 26.50, 38 and 50% retracements, from which we want to then reevaluate things. For now, I think we're stuck in a little bit of a no man's land, and that's just fine too. That'll wrap us up for today. Take the trial, get my notes. I'm over. I'll see you all tomorrow.